welcome back to another episode of Monday Madness. So let's quickly run through the market. So all of those that are new to Monday Madness, I basically go through the previous week. I could have capitalized on the move, what trade you could have taken to actually make money on the previous week. So we can see here was Monday, basically started over here. Okay. So as Monday started, the first thing you would have realized is that price closed above, meaning a break of structure. As soon as we have a break of structure to the top side, the first thing I usually do is add a fib from low to high. Then I identify buying levels. So I know fib is market's going to pull back to either the 38 or the 61 or the 78. So there I see a double bottom. So that will be my first POI, point of interest. So I'll add that support in, and I'll add an area of demand between that and the 61 fib. And then I'll also add, there's some buying pressure at 78. So I would have added that as well. As we're in a buying trend, I would obviously look for the continuation. You could actually add a trend line if that's something that works for you. Then I'll also double click on that, and I'll obviously, let me just do it. Just want to add the psychological level of 0.7 as well. Okay, so now we're basically just adding that psychological level as well. As price came down, I would be looking for candlestick patterns. So that's the only thing that indicates a buy for me. So it's not a lot of candlestick pattern confirmations over here. Market goes down, hangman candle on the bottom of trend, bullish engulfing. So 2 candle indications. So now the question is, do you then buy there? I won't personally buy there. So what I will do is actually add a fib on this trend, wait for price to break above other buying levels and that 61. So first waiting for a shift of momentum and then taking that short-term buy to the top side. So that's the trade that I would have taken. Okay. So now obviously your target will be the highs. So let me clean everything off. So now your target will be those highs. So you'll obviously go and take profit. Okay. Now price reaches high. This is where most retail traders lose money. So now people will say, well, it sold perfectly. But for the past 5-6 months, the sell was more of a shorter term thing. So if you sold there, you would have lost money. If you sold there, you would have lost money. If you sold there, you would have most probably made money once. If you sold there, you would have lost money. If you sold there, you would have lost money. So the chances are that you'll have like a 20 to 30% success rate by trying to turn around the market. Okay. It's always better to take the trend trades. But now we can see that price is reaching a high. On the 6H, we can clearly see spinning tops. So now the first thing we'll do is identify where do we see price pulling back to. So that's the first level we can see there and there as well. So that's what we're currently seeing. Price can pull back to any one of those 2 levels. So now we can also go and do the same thing, but at that moment price was floating there at the top. So I would have dropped down to the 1H. And what you can actually do to trade reversals is wait for price to break back inside the trend. And once we close below the trend, then you can add like a small fib on it. And then I'll wait for trades at the 61, 71, 78. Then I'll take those positions and then short. But now I know that price is at least going to pull back to this level. So now I can also do the same thing where I'll wait for price to break below certain levels. Then I can actually either add sales or sell for the first time. So as soon as price closes below there, I know we can take that trade. So basically trading the continuation the same way that I just showed you guys with the other way. And obviously there is closing below, look for another trade to the downside. So that's how you could have capitalized on AUD last week. And let's get on to the next one. Shades of JPY. If you do see analysis, this is not my analysis. This is usually just a smaller TF. It's just a profile I actually use to just explain things to certain people. So with search of JPY, we've been in a selling trend for quite some time. Low, 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 high, low, low. Okay. Now on the 6H, we actually went up, made a low high, but we also then came down, so we were supposed to push into lows. Then we made a high low, indicating possible buying trend starting. So what I did then was just add my block around that, saying that we need to break either side to have a trade. Market then went into a sideways market. So what you do with the sideways market is you jump down to the 1-inch time frame and you buy, you sell, you buy, you sell, you buy, and then all of a sudden what happens is price has a break of structure to the top side. What do we do when we have a break of structure to the top side? We add a fib from low to high. Now we're going to say, well, either 38, 61, or 78. I don't see any buying pressure there. I don't see any buying pressure there. Some buying pressure, but obviously the only buying pressure is there. So we're not going to use fib on this one. We're waiting for price to move into this level and then buy. Just by the market closing there, we already knew we're looking for buys. And now this buying will correlate to a few things. GBP JPY buying. Like I said, excuse the analysis. I haven't updated anything. These pairs I don't trade them, but or JPY buying, Euro JPY buying, etc. So there's a few things that will come into play just by using search of JPY, as I only use it for correlation purposes. Dollar index, I'm not going to touch too much on that, obviously, as this is tradable pairs. We're trying to touch on trading pairs at the moment. So, Euro order, we had a close and a break of structure to the downside. So what I did was I added my fib and I waited for pullback. So the only selling level that I saw was there. I don't see any selling pressure there. The only selling pressure that I saw was over there. So I knew we had to get a pullback at least to those levels. So I didn't end up taking a short, but what you could have done is obviously waited for price to break back above that structure, throw a fib on it, and then buy from the what? The 61, 71, 78. So basically taking that trade back into the highs, and then from there, we reanalyze and obviously see what's happening. So that was the only trade for me on this pair. Euro GBP, it's actually something simple. High time frame, clear uptrend, high, break of structure, perfect retest on the trend line as well. Most probably could have added your fib as well to the mix. But let's quickly jump down to 6H. I mostly trade on 4H. I just use 6H for trends. Price went down to get the bias of the trend line. And let me quickly clean everything off. As soon as price closed back above the buying area, we're waiting for a pullback and we add a fib and we do what? We buy from 61, 71, 78. So we do exactly the same thing over there. So that's the trade we will take, and then we'll have it continue it into the highs. So that was the trade that was being taken last week. Then USD, clicking everything off here. USD, I didn't see a trade personally. What I did see was this break of structure to the top side, okay, the week before. So I knew we had to get a pullback for a buy. So we just added your fib. You would have seen, okay, there's a 38, but there's 61, 71, 78, and a perfect buy. But personally, I didn't see a trade. Why? Because I don't see any buying pressure close to the price action. So I don't like going back too much on data, and that's why I did not take a trade on that specific market. Okay, this is actually what I was looking for last week. So GP order closer downside, what did I do? Added my fib from high to low, and I saw, okay, well, there is our selling levels over there. there is what's the closest fib? So you can either go to the 61 or you can just go to the 38% fib. You can also go and make sure you're using the psychological level, which will also be added confluence. There's quite a few things you could have done on this specific position to actually get that short position. And then correlation wise, obviously it played out. USD pulling back, meaning Australian dollar is losing strength. Australian dollar buying beginning of the week is obviously causing this to sell. Euro GBP going up, meaning that pound pairs are weakening, will be a double confirmation for that sell. So what we would have done is once again drop down time frames, perfect evening star formation, and then a sell to the downside. So once again, a few things you could have done: either sold after that evening star, as it was still a good risk reward, or obviously add your fib like that, wait for price to break back below levels, and then take the sell. So multiple things you could have done. You look at GJ. I mostly look at the high time frames, just because of the fact that it's so volatile and moves in bigger waves. So over here, what I'm seeing and what I'm still seeing is that inverse head and shoulders. So I've been stuck on that on the higher time frames. I've not actually been analyzing the lower time frames. Let me quickly see what happened last week. 6H is a good way to just see what's actually happening in the market. So what I can actually see is a clear sideways market on the specific market. So starting last week, we had like that sales, but I wouldn't sell there, to be honest. The reason for that is we had an equal lower high, but we also made a higher high, indicating there's buyers, sellers in the market, but there's also buyers in the market. Usually when I don't look at trading the market. So GJ would also not be touching for that week. GU, we actually had a sell on the consolidation. Perfect M pattern as well for those of you that do understand your patterns. So there's a perfect, looks like a V, and then pushing up for a double top, that will create an M pattern. And that should be your confirmation. Then even on the daily, let's quickly look at the day. Look at those hangman candle, shooting star, spinning tops, eventually spinning tops as well. So many candles indicating selling pressure coming in. So the M pattern for the reversal pattern and the counter patterns for the reversal pattern. So once again, two ways to approach it is number one, identifying we were in a selling market or a sideways market. So you could actually just trade that sideways market. Let's quickly drop down to the 1H time frame then. So very simple, you're selling, you're buying. But just the, what do? We have a full close lower than our area of support, indicating selling pressure. So sell, and a lower high second confirmation. And then we just sell, breakout, retest, sell. So you would have added a fib on that as well. So okay, well, 38% fib also aligns with that level and with previous selling pressure. So that's just a continuation to the downside. Okay, multiple things once again to look for. USD CAD, I'm not even going to touch on. I haven't seen anything on this pair for quite a while. What I actually see now is the channels that's running here. That channel and then this channel. Now it's forming the exact same concept over there as well. So we do have the same thing lining up and happening as well. 1, 2, 3. So just a little bit of a wedge forming on that specific pair, but not something that I would trade or something that I was looking at personally. USD ZAR, I did actually do an update on this. So we can see we had a resistance there. Full close above. What do? We just add our fib, identify previous buying levels, and then we use 38% fib over there. Okay, so we can see there's multiple There's also some buying pressure there. That would be the reason for the push lower. So we most probably would have used a different fib. Would have used the 61 fib there as well. But in situations like this, obviously you need to look at candlestick patterns. Look at that, rejections, buy, rejections, buy. Market just went straight through. So if you entered, it's mostly because of impatience. Okay, you're not being patient enough to wait for entry. Not even on the one edge, just the candlestick confirmation. Then we started stacking up. So either looking for entry there at the bottom, which I will not do. I'll rather wait for price to break back above the buying level. And once we break back above the buying level, then I'll look for a buy and a continuation to the top side. Okay, guys, that's the pairs that I'm going to be covering this week. I will be doing different pairs every week. We'll be doing some indices. We'll be doing some gold as well. I'm just doing the Forex pairs this week as the price action is a little bit different than to your gold and your indices. Hope you guys enjoy, and then I'll see you guys next week. Cheers.